Last week, DoorDash announced a huge deal with Klarna, where individuals can buy food on installments. Things like this tend to irk me because there's a lot of individuals that are unaware of how this actually works and how this can be detrimental to their financial situation. You will have individuals buying burritos or maybe buying seafood boils, I don't know, but using buy now, pay later, and essentially leveraging more debt, credit, etc. to make purchases on food. For one, the company knows that they benefit from this because this allows them to essentially charge people interest and get them locked into other payments that they probably can't afford. Right now, credit card delinquencies, mortgage payments are at all-time highs, and a lot of individuals are defaulting on their loans. And that's not even to mention the issues going on with student loan debt repayment. So how is this a good thing for the American consumer? We live in a debt-based system where essentially there's a lot of liquidity, there's a lot of capital that's being pumped into the market in order to keep people in consumer debt. As you can see here, this chart is very interesting because it shows Bitcoin and it shows the American dollar. And essentially what you see is that when dollars are printed and essentially individuals are allowed to leverage credit to do different things like buy DoorDash payments, that's devaluing the currency because money's being printed out of thin air. So what seems to be happening is when individuals compare what's going on with Bitcoin, they look at the price going up and they think that the dollar is just staying flat horizontally across. However, what's really happening is that Bitcoin is remaining stable as a store of value, and it's not printed, and it's just not printed like a United States dollar and offered in credit like DoorDash payments, so individuals can make payments on buy now, pay later for burritos. When that happens, the dollar goes down. This chart here also shows how the S&P 500 performs in relation to the United States money supply, M2. And the M2 money supply is essentially an indicator of how much liquidity is being pumped into the market due to the Federal Reserve printing dollars. As you can see, the S&P 500 is performing right in line with how much money is pumped into the market. And essentially that just shows you that everything is being inflated because money is being printed and money is being flowed into the market, not because the economy was just doing so great. And finally here, we can see that in 1933, 1 ounce US gold coin was $20.67. Now, a 1 ounce US gold coin is $1,770. But do you think that's the case because the dollar is being increasing in value, or is it because it's being devalued? It's because gold as another store of value is outperforming because so much money is being printed and essentially pumped to the system. Liquidity is increasing. Liquidity is being pumped into the system, especially since COVID. Even before that, with the recession of 2008, the Federal Reserve printed money in order to prevent the economy from collapsing altogether. And a lot of big banks got bailed out. And now we're in situations where government spending, bloat, a lot of bad policies are essentially, leading to inflation being high. And there's a lot to unpack there. But at the end of the day, the consumers are the ones that end up being beat up. And to add insult to injury, we have companies like Robinhood allowing people to gamble on college basketball tournaments. They call it prediction markets. I think it's interesting because Robinhood initially said that they were started to democratize finance, but I don't know how you can democratize finance by pumping gambling. I think this is just a sign of the times. You have DoorDash allowing people to buy now, pay later with Klarna to buy food. You have Robinhood essentially tricking people into thinking that they are helping them get more financially literate, but they're also trying to feed their gambling habits with prediction markets instead of calling it gambling. And the government is just spending money, printing money, and essentially masking the market doing well with inflated asset prices. And when those inflated asset prices go up, it doesn't mean that most people feel richer. And most people don't invest in the market, which is another issue because of the lack of financial literacy. And there's all these, distractions that are going on online in terms of distracting people from how to actually build wealth and build sustainable long-term success for themselves. And lastly, I'll leave you guys with this quote. It's from an author that wrote this really interesting book called The Bitcoin Standard. I highly suggest everybody check it out if you want to learn more about Bitcoin as a store of value and other assets that exist, right? This could be the same for stocks, etc. But I love that Bitcoin Standard book. And what he said was, your groceries aren't becoming more expensive. Your money's becoming less valuable. Your supermarket is not the problem. Your central bank is. So when you take all into account what I just showed you guys, comment your thoughts below.